Good morning and thanks for tuning in. This is Stocks to Watch on BloombergQuint and I'm Alex Matthew. The cues from overseas are strong with the US markets having hit a record high. So it'll be interesting to see whether our markets can keep the momentum that they generated yesterday. My guest today is Rasmik Oza from Kotak Securities. Morning, Rasmik. The first stock we're talking about today is Zee Entertainment. They had a disappointing quarter, to say the least, sharp drop in revenues and profitability. The management, however, has said that it's confident of a bounce back in both those metrics in the second half of this year. Would you concur, or would you say that it's time to reevaluate the inclusion of Zee in your portfolio?
Good morning, Alex. Zee has been actually a stock which has, been in news not for mainly fundamentals but more than other reasons. We have a reduced rating with a fair target of 185 rupees on the stock. In fact, we have revised the price target recently. The results actually have been a little disappointing, but there are certain good aspects which have come up from the results. Is we've seen the working capital improve a lot. They've cut down on receivables, on inventories. After many quarters, we have seen the cash generation improving. The cash and the treasury is improved. That's one good thing to watch out for. The step down of Mr. Subhash Chandra as chairman and Mr. Gopalan as the new chairman is also a welcome step. I think they have talked about strengthening the board going forward. So these are some of the issues not related to results, which will be actually take the forefront for the company in terms of re-rating, because we've seen the stock getting hammered, and a serious de-rating is taking place in the stock in the last 1 year. Now these steps to improve the investor confidence actually will be a necessary step from the company side to see that there is a re-rating in the stock going forward. I think on the revenue side, I think the ad revenues are down 63-65%, I think, which was anticipated. Somewhere the subscription revenue growth has now tapered, because last year you had almost a 35% jump in subscription revenue, 33% jump, sorry. So on that higher base, the subscription revenue looks little muted. And there has been some more disclosures that have come on from the company, which is a welcome step from investor perspective. So I think looking at all this, there is scope for re-rating, because the stock, I think, trades at very inexpensive valuation of hardly around 10 times on FY22 estimates. The company has said that they're expecting ad revenues to start improving from the third quarter of this fiscal year. So so all the ingredients actually point to some kind of re-rating potential, depending on how the company handles the situation going forward.
So if I'm not mistaken, very quickly to close on Zee, it's a wait and watch for you till certain ingredients get added, and then you will be confident of a re-rating. Yes.
That's right, Alex.
Okay, let's talk about the second stock, which is Bharti Airtel. It's been a stock that has been in focus for the last couple of weeks, in fact, if not more, particularly because of the ongoing case in the Supreme Court. And by the way, any updates from that case you'll find on the website BloombergQuint.com. Not conclusive as of now, but we're talking about it, Rasmik, because of the comments that were made by Sunil Mittal at the AGM, where he's talking about ARPUs having to reach 300 rupees per customer, if at all they are to enable low-end customers full access to data at a rate of 100 rupees. And he's saying that he hopes that ARPU will pass 200 to 250 rupees in the next few months and eventually settle at 300 rupees. They currently stand at 160, which incidentally is the highest among the four players. Do you think that that's a possibility? And how do you see this AGR saga playing out?
Alex, today we have the court hearing on this AGR thing. I don't think so. There could be any major negative, I think so, as far as Bharti or Vodafone is concerned, because I think much of it is known. Only thing is now the new thing which is coming from the Supreme Court is that they've asked for more data or information from the insolvent companies who actually had also got spectrum, and whether they are also liable to pay. So that's actually there could be, if possible, there could be some additional liabilities on Reliance coming in. But Bharti, to the extent whatever AGR dues are required, I think they've paid almost most of the dues. They have already done with the payment. if there is additional penalty or any additional charges which coming from the Supreme Court side, then I think they need to pay up. But the balance sheet is quite strong enough. In fact, before this AGR thing, they had almost 30,000 crore cash in the balance sheet. They had a $3 billion QIP then, and for the next 2 years, I think so. The market looks quite promising. As you said, yes, they have been guiding for the last 2 quarters that in the near term they expect ARPUs to go to 200 and the medium term 300. This happens, it will be a great welcome step for the company, because somewhere I think because of the AGR case, the ARPUs have actually stagnated recently. But I think once the AGR case settles down, we can expect some kind of upward revision in the ARPUs from the two players, that is Reliance Jio and Bharti. If possible, we'll see that happening in the next couple of months and quarters. As you rightly said, the ARPUs right now, stand at the calculator ARPU is hardly 152 rupees per month. But still, the run rate of Bharti on a console basis is they did around 24,000 crore revenue, 10,000 crore EBITDA. I think our estimate is that with just 174 rupees ARPU next year also FY22, they should do EBITDA of more than 50 to 53,000 crore. Now, if you're talking of more than 200 rupees, then this EBITDA could just shoot up and go up substantially. So Bharti is one of our compelling stories and stocks in the large cap space. We expect EBITDA of almost more than 1 lakh crore in the next 2 years with free cash flows of almost 30,000 crore. So the business is on a very sound footing, and either it's a two-player or three-player market. It doesn't make a difference for Bharti going forward, because in all metrics it scores better than its peers, and uh, and I think so for the data part. I think it has more, just 53% of the subscribers use 4G as of now. So if more subscribers use 4G, as well as if the 4G rates actually also go up in future, that will add to the EBITDA margins of the company. So for us, the target of Bharti is 710, and it's one of the high conviction large cap stocks in our portfolio for clients.
All right. So the last one, and slightly quicker answer here: Reliance Industries, the biggest of the big, and now you're seeing that Reliance Retail is entering into new businesses. This is something that we were anticipating. A lot of deals likely to come forward. The latest one, of course, was announced at midnight last night, in an entry into the pharma space with the acquisition of NetMeds, which is an online pharmacy. From the context of Reliance, though, a very small deal, 620 crore rupees for a company that reported annual profits of 70 odd thousand crore rupees for last year.
Yeah.
But how do you rate it?
I think there have been talks that Reliance would be looking at actually buying out some of the more newly startups in this space. It actually complements them in their entire geo offering which they want to do. So I think they are looking at niche verticals where businesses have improved. For example, this e-pharmacy space, the pandemic has been a blessing in disguise for this kind of business. So these essentials along with pharmacy products have been actually a big hit in terms of online buying, and the business has actually gone forward. 2 years businesses actually come in right now itself. So for Reliance, I think it fills its ecosystem in terms of offerings around the Geo platform. So we could see some more these kind of buyouts in future also, because now they have the cash wherewithal to actually spend and buy decent penetrated companies. So the kind of companies you probably like for example in NetMeds, they have around 5.7 million customers and presence in 670 cities or places. So it actually it is a complementary thing for Reliance in terms of completing its offering in the digital space, in the
But would
e-commerce
you,
space.
sorry, but would you buy Reliance at this price? Is the question.
I think we would wait for better opportunities in Reliance, because our target price is 2150 for the next 1 year. Somewhere because of all this series of announcements, the stock has got re-rated too fast, too soon, and still in the main business, I think numbers are still actually coming up a little on the lower side. So we would like to wait for some better entry or better opportunities in Reliance for making money from here.
Okay. Rasmik, thanks so much for joining me today. We are over the time threshold, but I do want to point out one last stock, which is Indiabulls Real Estate. Do watch out for this one in trade today. Big announcement on the front of the merger with Embassy Group. Remember, it was rated at a 26% premium to the previous close of 92. The previous close yesterday. That's at 92.5 rupees per share. So watch out for this stock in trade today. Thanks so much for joining me on this conversation, and have a profitable day.